Hello, I'm called Jingonelli. So for today we are going to be joining Mr. Kassim's class. And before I begin off, make sure you're having a notebook so that you jot down important information as we'll be speaking. So beginning off with the introduction of accounting. What is accounting? Accounting is a process of identifying, measuring, and communicating economic information to the various users to enable them in making informed, rational economic decisions. So, what do they mean by rational? What do they mean by rational economic decisions? Now, with this, these are decisions made by the organization, including working capital decisions, capital budgeting decisions, investment decisions, etc. Then moving on, we are having business organizations. Now, with the business organizations, we are having sole proprietorship, whereby the business is owned by one person, and partnership, voluntary association of two or more persons for the purpose of conducting a business. Then corporation, where a legal entity created under the laws of the state or government. Then looking at the differences between the three forms of businesses. Here we're having the proprietorship, partnership, and corporation. So beginning off with the proprietorship, here one owner, it is owned by one person. Then two, it should have been no separate legal entity. So it is no separate legal entity, and here they mean that the owner and the business are the same. Same applies to, then moving to the third one of proprietorship, which is limited life. Then with partnership, there is shared owner control. And then two, with partnership, still there is no separate legal entity. Then three, limited life. Then with corporation, there is a separate legal entity, and then there is also unlimited life. Then moving on to the activities. Now here, activities of a business. Every business, regardless of its organizational form, its industry or its size, it's involved in three types of business activities, which are financing activities, investing activities, operating activities. So moving to the next slide. Business goals. Here, a business is an economic unit that aims to produce or sell goods and services to customers at prices that will provide an adequate return to its owners. So businesses have similar financial goals and activities despite their differences. So they need to earn enough profit to attract and hold investment capital is the goal of profitability. Then again, businesses must meet the goal of liquidity. Now with liquidity, it deals with the measure of the ability of a debtor to pay their debts as and when they fall due. And moving on to another slide, we are having the accounting information and its use. So here, the roles of accounting information, it is used in aiding decision making, planning, controlling unnecessary expenditures, facilitation of credit transactions, detection of fraud and errors, then assessment of financial performance and financial position, then assessments of taxes, then monitoring management's performance, etc. So moving to another slide, we're having the uses of accounting information. So we're having the internal and the external. So with the internal users, we're having the management. They use for them, they're interested in the financial position, to know if there's a loss or a profit. Then we're having the employees. Now for the employees, they're interested in the financial position, to know whether they're having or to know, like, to see their job security. Then we are having the external users. With the external users, we're having the lenders. For them, they're interested in the financial position for collateral security. Then we are having the shareholders. The shareholders, for them, they're interested in financial position to determine the profits or the dividends that will be paid to them. Then we're having the debtors, whereby they are interested in knowing whether the business is a going concern. Then we're having the potential investors. For them, they are interested in the financial performance of the firm. Then we're having the government for tax assessment. Then we are having the general public. For it deals, it looks at the corporate social responsibility, like giving back to the community. Then we're having the liquidity. We're having the suppliers or creditors. For them, they look at the liquidity position. Is the firm able to pay off its current liabilities? So that's with that. Moving to another slide, we are having the branches of accounting and disciplines, and we're going to be joining Mr. Kassim's class, as I told you. So with this, we're having the financial accounting, managerial accounting, cost accounting, tax accounting. So with this, let's join onto Mr. Kassim's live class, and we listen in. Make sure you jot down important information.
When you come to second year and third year, you will study cost accounting and management accounting when you come to your third year. So for the purpose of our class, we shall mainly focus on financial accounting. Then we have environmental reporting. This focuses on reporting the impact the business has on the environment. As simple as that. Then what impact does your business have on the environment? And like I said, sustainability reporting involves reporting on the triple bottom line, reporting on people, reporting on the planet, reporting on the profits. So when you produce a report that encompasses those three, okay, that report is regarded as a sustainability report. So entities nowadays are expected to report on their impact on the environment, the impact they have on the social aspect, that is the people, and then the impact the business has on the profits. And then finally, just type in the chat. Let me check briefly in our chat and then see. Someone is saying that I should explain something about auditing. I said auditing is an independent examination which is done by individuals whom we call auditors to examine the financial statements. These auditors will look at the financial statements which have been prepared, examine them, see whether these financial statements show a true and fair view state of affairs of that particular business. Auditors will examine the financial statements, see whether the financial statements are free from errors. And after they have examined those financial statements, even to see whether they have been prepared following the accounting standards. Okay? So once they establish that everything is in order, they will issue what we call an audit opinion. These are independent individuals. External auditors come from those firms, audit firms. Okay? They are hired by different companies to examine their financial statements. Okay, to see whether these financial statements show a true and fair state of affairs, and after that, then they will give what we call an audit opinion. Tax accounting, like I said, its role is to prepare tax returns as well as tax planning. Okay, and then Sustainability is just an extension of the environmental reporting, this time around, to include people and the profit. Okay? Then integrated reporting, it is now one report that will report about whatever goes in a sustainability report, but also includes the financial statements. In other words, in an integrated report, we have the sustainability report, which has a report on people, a report on the profit, a report on the planet, but we also have the income statement, the statement of financial position, the statement of changes in equity, the statement of cash flows. So in other words, an integrated report it covers all the reports, including the financial statements. It includes a report on the people, a report on the profits, a report on the planet, but as well as all the other financial statements. We find them in an integrated report. Sustainability only restricts itself on the three dimensions: people, profit, and planet. The environmental report only focuses on the impact of the business on the environment. These are new developments within the accounting domain. Okay? Environmental reporting, sustainability reporting, integrated reporting, these are new developments within the accounting domain. The old disciplines were mainly financial accounting, management accounting, cost accounting, tax and auditing. But now, of course, with most of the countries now turning onto the environment, looking so much about the impact businesses have got on the environment because of these things of global warming, climate change. You have heard about those things, greenhouse gas emissions, and so on. People are now embarking on conserving the environment. So that's when now environmental reporting came in, sustainability report came in, and as well as the integrated report. But like I've said, you will have to go and look for more literature on each of these. So let's try to continue. Environmental report, someone who is asking about the environmental report, I've said this is a report about the impact the business has on the environment. Okay? Sustainability accounting, it is a report which does not only focus on the environment, but it also includes the social dimension, the impact the business has on the people. Okay? Forget about the environment, but what impact does the business has on the people, the environment, and the profit. Tax accounting is all about preparation of tax returns as well as tax planning, and then integrated report is a holistic one which covers almost all the other. Okay. All right, I think we can proceed. I can't see any other in the chat. Except for people who are, what's the connection between the environment, sustainability, and integrated? In a sustainability report, the environment is included. In an integrated report, we do not only have the environment, the people, and the profit, but we also have all the financial statements. Financial accounting, I said, its main focus is to provide information to the external users to aid them in making informed economic decisions. So financial accounting is outward looking, while management accounting is inward looking. Daddy Campbell, can you type in the chat room? I see what you have to say. People are just asking the same things. I think we can't go back to this. I will share with you some of the materials and you try to navigate through. Let's look at ethics and accounting. Ethics. This deals with values, it deals with rules, it deals with justifications that govern one's way of life. Ethics deals with values, it deals with rules, it deals with justifications that govern one's way of life. Ethical behavior has not always been the rule in business. Most businesses do not bother about their ethics. You find someone selling things which are expired. Okay? So business history reveals activities such as price gouging of customers. This is extorting customers. Sometimes you go to most of these businesses in town, and someone will charge you a price, but when you move to another business, you find that the price is half the price you paid the other side. Extortion of customers. Sometimes people use inside information for their own personal gains. Okay? And some of you may even give bribes to government officials for favors. Okay? So some people even give bribes to government officials for favors. I look at situation where you go to audit a particular entity and the accountant of that particular entity wants to give you an envelope. These are ethical dilemmas. And these are things we as accountants are really facing. These are ethical dilemmas. You go somewhere, someone wants to give you money so that you give a good report. Ignoring health and safety regulations. Selling arms to those governments which are aggressing others. Polluting the environment. All of these are ethical issues. Okay? Then I suppose some of you would have heard about companies like Enron, WorldCom, and Lehman Brothers. Yeah? These were brought to the forefront because of these ethical issues. There are individuals who use the information to their benefit when actually these companies were performing poorly and some of them even collapsed. You imagine a situation where the auditor has given a green report that this firm is performing very well. Before you know it, actually, before even the year ends, the company ceases, it closes, it files for bankruptcy. All of these just our, ethics as accountants. So when you look at accountants here, we are saying accountants face several unique ethical dilemmas, such as the output which are produced by the accountants has financial implications to individuals as well as businesses. Examples include the amount of taxes which are paid, the amount of bonus to be received by employees, prices which are charged to customers, the earnings which are paid to the shareholders in the form of dividends. What do I mean in this case? Ladies and gentlemen, listen carefully. When an accountant prepares an income statement, that income statement has implication to individuals as well as the businesses. When you prepare an income statement and you report a very wonderful net profit figure, this then means employees might begin calling or pushing for an increase in pay. Tax guys may not want to listen because they have seen, yes, you have made a profit. They will know that the business is performing very well. Okay? So even the shareholders themselves begin anticipating a dividend. And that's why as an accountant, you are faced with so much pressure. And this pressure may come from the employees, it may come from the shareholders, it may come from even the government sometimes. And if not even from the auditors. You know that the auditors are coming, so you have too much pressure mounting on you as an accountant. And so as an accountant, you are expected to ignore all those pressures and do what is expected of you. And should you do something that is contrary, because you want to satisfy a given group of individuals, and then you will face what such individuals like Jamwa faced. I suppose some of you know who Jamwa is. Okay? So as an accountant, you are expected to do what is right, regardless of all the circumstances that may be surrounding. Accountants, number two, have got access to what we call confidential information. Accountants have information about the tax returns. They have information about the salary data. They have information about details of the financial arrangements and even the planned acquisitions in our business we are planning to buy the other farm. Accountants will have that information. Even when they are proposing price changes, accountants will have that kind of information to their ministry. So you as an accountant, what are you expected to do? If you have this kind of information, you are not supposed to disclose it. Accountants are expected to be confidential. So confidentiality is one of the tenets. It is one of the items we consider as accountants. We are expected to be confidential. We are not supposed to disclose information of the head with regard to tax returns, with regard to salary data, with regard to details of the financial arrangements and those other planned acquisitions and so on and so forth. We are not supposed to provide this information. Ladies and gentlemen, I suppose our time is almost up. When we meet, we shall begin on the generally accepted accounting principles. Daddy Campbell, what do you have to say before I leave this class?
I think that will be all. Thank you so much for watching and listening in. Make sure you subscribe and also so that you can get access to more videos